Assalamu alaikum. Good afternoon, all, and welcome to our fifth webinar of the IR Essentials series. My name is Leila Asaraf. I'm from the Saudi Exchange Listing Division, and we're thrilled to have you with us today. The Saudi Exchange and Middle East Investor Relations Association, MEIRA, have been organizing this series of webinars titled IR Essentials to understand best practices in investor relations in a practical and engaging format. In each of these webinars, we aim to tackle a critical topic to building a successful IR. And we're pleased to have you with us, our issuers, in our fifth webinar of this series, addressing the recent 2021 MEIRA IR Practitioner Survey. We aim to discuss findings across the IR profession in the MENA region and Saudi Arabia, and to speak about what are the key IR trends happening in the region and in the kingdom, how IROs should respond to the future demand and requirement of investment community, and how does ESG play a great role in the day-to-day IROs, the benefits of adopting a more diverse and inclusive approach to as part of IR programs. So without a further ado, I'd like to introduce you to our esteemed speakers. We have Debbie Nathan again with us. Debbie is a managing director at DNA. She's also worked closely and collaboratively with MEIRA in publishing this survey, and she has over 15 years of experience within the IR field and communication industry. We've also got Turki AL-Ashaikh, a seasoned finance professional with over 15 years experience in diverse domain of treasury, corporate finance, and investor relations. He's currently the IR manager, general manager at STC, one of our valued issuers. And lastly, but we have Sofia Bory. She's a MEIRA vice chair and head of investor relations at First Abu Dhabi Bank, FAB, with an extensive experience in IR and the sales side as well. Now, I'd like to hand it over to our colleague, John Gollifer and Alicia from MEIRA, who will be mandating this webinar. John, the floor is yours.
Super, and a warm welcome on behalf of MEIRA and Leila. As we always say with this IR Essentials series, we can't do it without the Saudi Exchange. We were just saying earlier how important it is to maintain the momentum. I know we've all been through a pretty tough year following an equally tough year in 2020. And I think it's timely to reflect on where we've come from, what we've learned, and frankly, moving on and agreeing what we can do in terms of best practice. And there's nothing better, I think, than asking the MEIRA community what they think and what we might be expecting going forward. And we've been delighted to work with Debbie for some time. I believe this is the fourth iteration of the practitioners survey. And indeed, the report was launched quite recently at the annual conference. You'll all be surprised to see me sitting next to my colleague Alicia, and that's for practical reasons. But often, as I often say, and said it earlier in the webinar, we forget that we're not a one-man band, that actually most of the work is done by other people, including Alicia. And she was party not just to the 2021 survey report, but the previous three iterations, which go back a number of years. And I just said to her, I mean, we're in the office, it's a working meeting, so let's treat it like that with our esteemed speakers. And as Leila kindly introduced the speakers, I should also add that the Turkis, the SDCs, the Sofias, the FABs feature always in terms of best practice, and certainly at the most recent Institutional Investor IR Best Practice Awards. I know Sofia will blush as our vice chair. She had a clean sweep, not just in the UAE, but across the region in terms of best practice IR awards. Of course, I always add to everyone out there, it isn't just about winning awards. It is essentially about improving yourselves and making sure that your IR gets better and better. So we're delighted to have this panel with us. And perhaps we'll start just by reminding you all that it is an interactive webinar. You do have a Q&A facility. Please do ask questions of the speakers who are kindly giving their time over the next 50 to 60 minutes. And let's make it, as I said right at the outset, very much a working discussion a working day in the life of IR, and let's think about the future of IR. With that, Debbie, I'm going to hand the floor over to you and ask you just to take us through the key highlights of this most recent biennial report, the 2021 IR Practitioners Survey report. Thanks so much.
Thanks, John, and thanks everyone. Lovely to have the opportunity to talk to you and share some of the insights from the report. If you've had a look, you can probably see it is a really detailed, kind of rich report with some really fascinating content. The benefit of being in the fourth year of doing this is that we have history now to compare to, so it's nice to see the trajectory of trends and where things are heading. I'm just going to pick up some of the really key highlights that I thought was worth discussing, and then if you've got any other observations afterwards, feel free to ask or join in. But the first observation that you'll see when you first open the report is the gender imbalance of the respondents, and the demographics showed that there was about 82% of males that made up the IR population in MENA. I think that's possibly because the largest participation was actually in fact from Saudi, and obviously in this region it's probably more male orientated, and there's lots of work being done across the region to improve kind of female engagement, and I think that will probably come up in some of the kind of D&I and ESG chat that we talk about later. Another really interesting observation is that there's one third of regional IR professionals work for small to medium sized firms, and that's companies with a market cap of under $500 million US. And that number is significantly higher than in 2019, when the figure was about 21%. So what we're seeing is, and this is a global trend in fact, so it's nice to see that kind of the MENA region following, is that the IR resource is becoming more of a necessity in smaller cap companies, where 5-10 years ago it was almost felt like they couldn't justify having the resource. Another interesting observation, the proportion of IROs in the region with over 10 years IR experience has increased to 27%. And again, that was 18% in 2019. So really positive trend that people are staying in IR for longer. And with that trend, obviously, we then saw a shift upwards in base pay. So people are being paid more, as you'd expect if they're getting more senior with more experience. I think actually, as we're talking about talent, just really briefly, and we can touch upon it later, there obviously is a shortage of talent. It goes without saying, compared to other regions globally, that within MENA, despite there being a huge interest in IR, particularly in the Kingdom over the last 12 months, that there still is an imbalance on supply and demand. This gap probably will be bridged over time. It is a growing profession, the likes of MEIRA and all the exchanges doing what they can, speaking to universities and colleges to try and entice people into the profession, but there's still a long way to go, and I think Turkey will probably talk more about this later on in terms of what's being done to promote the profession. Encouragingly as well, if we just move on, 20% of teams actually increased in size over the last 12 months, which I took that as really good news, particularly if you look at it in context of what the last 12 months have brought to globally, that there's still investment despite the kind of turbulent markets. And actually, I think what companies and issuers have realized is actually they need IR now more than ever. Investors are demanding, as the pandemic broke out, investors were demanding insights and intel almost immediately, and if you didn't have a robust IR function, you were going to be in trouble. Also, there's new pools of capital, new types of investors, and 40% of respondents had said that they'd actively targeted these types of new investors to help diversify the register. And obviously, these types of investors would include ESG funds, etc. There's various ways that you can go about targeting them. Again, we can probably talk about that and share some best practice on that, and the types of investors that people are targeting about. But that leads me on to kind of ESG. Obviously, it's a huge topic that we talk about in the report, and we look at it from accountability, i.e. where does ESG sit, who holds the pen for reporting, how much time is spent on ESG. Some companies would have a separate sustainability team, some have it embedded within IR. So there's no kind of right or wrong, and there's generally no consensus where it sits. But what we do know is that it sits somewhere in every organisation. D&I is rising up the ranks. Investors ultimately want this information, irrespective of the size of the firm. So companies can't really dodge it anymore. And obviously, there are lots of challenges for an IRO in terms of consistent reporting, but you can't turn a blind eye. Companies are evolving their ESG journey, and I thought, again, we can talk later on about how that's actually happening, particularly where that gets cascaded from the top, from management and board. It really does need to be driven by their cooperation and engagement and buy-in, and then IR obviously integrating it. One other aspect in the report that we look at is technology, and again, almost 60% of people in MENA have invested in their technology over the last year, and that possibly won't surprise many of you, because of the way that everyone had to quickly adapt to hybrid models of roadshows, etc. So there's I think what it's done is brought about a more efficient engagement with investors, and now we're at the point of deciding what is the right balance. But alongside that investor engagement is the term digitalization of IR, and we can talk about new initiatives, embracing and adapting technology. What are the pros and cons of doing that? And then embedded within that is, how can you make your IR function more efficient by the use of artificial intelligence, i.e., information from investors and investment styles will play a big influence on IR, and how can you as an IRO utilize that to make your function transform to more efficient practices. I guess that's kind of, I would say, the high levels, the wrap up of the key findings, and obviously we'll continue to talk through those as we carry on the discussion. But I'll hand back over to you, John. I don't know if anyone's got any questions at this point.
I think that's quite fascinating, Debbie, and as a former IRO myself, always thought the resourcing question was always part of successful IR, but of course, as we know, particularly through a global pandemic, to ask for further resourcing, to ask for investment in technology, to think about how to harness internally everything you need to address the highlights that you've just talked about, Debbie, including, of course, complex extra financial issues around ESG is a huge ask in a horrible time. So I am going to come to Turkey with some of those questions, but before that, I'd just like to ask Sofia, as a very well-known IRO, obviously a champion of IR, given her vice chair role at MEIRA, whether, having heard, I think, some things, Debbie, that maybe didn't surprise me too much, I'd like to flip the question around to Sofia and say, what surprised our vice chair, given the most recent findings of this 2021 report?
Thanks, John. Thank you, and thank you to the Saudi Exchange as well for this great initiative. It's really fantastic to see you really leading the way in terms of, bringing more awareness in terms of IR best practice, and these sessions are extremely useful. And thank you, Debbie, for conducting the practitioner survey this year. And it's always great for us as IROs to really get some perspective about our peers in the region and how the landscape looks like. And more importantly, how the landscape really evolves, because our markets are moving fast. There has been quite a lot of disruption due to COVID, and our function absorbs what's happening externally and evolves, obviously, with all the developments that are happening. And it's great to see also a lot of developments, like you mentioned, around technology, and perhaps we can touch on this later when we talk about the future for IROs and how each one of us sees it. But in terms of the report itself, very good insights, right? I mean, I was very positively surprised to see, for example, that amongst the population of IROs, we have people coming from very diverse backgrounds, I think more than ever before. You see IROs coming from finance. I mean, traditionally it was, finance or communications, but, increasingly you have IROs, and this is, I guess, a global trend as well, coming from the sell side or the buy side, or strategy or other functions. So it's really amazing to see that actually this function resonates with so many different, functions, roles within an organization, and it has really a transversal impact. And it's great to see that diversity amongst IROs. And just on that particularly, one of the things, so at FAB we are a team of 5, right? And one of the things, I think one of the strengths of our team is that each of us actually comes from a different background. So I think our strength comes from the fact that we have these diverse and complementary skills, and that's amazing, right? To have each one of us contribute differently to the IR effort, and each of us with a different angle, a different view of what our stakeholders need and want, and how we can basically meet our stakeholders' expectations. So I think diversity in the broader sense of the term is great, and it's great to see that, at least from a skill set point of view. I don't want to speak about gender because that's, I think, the survey this year gave results that were very surprising to me. But I guess this is it also reflects obviously the base of our respondents. The other positive surprising element, I would say, is to see investor targeting becoming more and more key performance indicator. I think that's amazing, and that's how it should be. Now, on the flip side, I'm surprised actually to see some of our peers consider share price performance as a KPIs for IR. I don't think that should be the case. I'm a strong advocate against this being used as a KPI, because the market moves, right? And there are lots of things that are out of our control. I think things that we can control should be part of our KPIs, and that includes investor targeting in a certain extent, obviously, if done properly. This also could include perception, measuring perception, and we conduct an investor perception study every year, or sometimes twice a year. So this is also very useful to track performance. Yeah, I mean, I would say that these are the areas of positive and negative surprise, I would say. But overall, a great report. And again, thank you, Debbie, for doing this for us. That's really amazing.
Of course, the big irony, Sofia, is that poor old Turkey and I feel very outnumbered. I think this is a very imbalanced discussion. If I look at the screen,
Indeed.
How do you feel, Turkey? Now, excuse my flippancy, Sofia. I think if I look at what I heard you say, I think the KPIs are so important, and we'll talk about those a little further in the discussion. I'm also fascinated by what Debbie and you said around investor targeting, because I think the Saudi exchange would recognize that as the markets open up, there is certainly going to be more appetite, particularly given the healthy IPO pipelines that we're seeing in the region, for more investment coming into the region. So I'll be very interested to know whether we can share a bit more around the targeting, where the targeting is working successfully from a UAE company, from a Saudi Arabia company point of view. But let's turn to Turkey, who I'm very much looking forward to hearing from, and trying to put it into the context of IR in the Kingdom, Turkey, in terms of your own reporting line, your own resourcing, and how IR has been able to make a difference in the worst of years, if I can put it that way. Thank you.
Yeah, thank you, John. Again, hello, everyone. Just to give you a little bit of heads up, STC, I believe it was one of the earlier adopter of IR function. I think we started the IR functions back in 2006, if I'm not mistaken. It was a very small function under another person's responsibility, but that function has grown over the years. Since then, I believe that the top management STC has spared no time in improving the overall function of IR. This can be seen from even the size of the team. We have a very big team, honestly speaking, in which we have different people from different background, different nationality, different even gender. The way that we constructed the IR and STC, that we have basically two separate lines, because we believe that you need to be specialized in certain area and the IR itself. So for example, one of my directors is responsible for all the buy side and sell side activities, including, for example, including but not limited to, of course, all the presentation, the targeting, meeting investors, of course with me, preparing all the Q&As and etc. And the other reporting team are basically responsible for all the regularity matters, including but not limited to, again, all the announcements that we make, all the required information that you need to upload into DAWL. For example, we have the XBRL, the summary financial statements, and etc. And as well as they are responsible for the retail investors. As you're aware that STC currently has it has grown significantly, the shareholder registers that we have from, I think, 50,000, now we have reached around 78,000 people who already STC shareholders. So you need, basically, sometimes we receive a lot of calls day in and day out, people asking about their dividends and etc. So it's really important to have a team who will be responsible for taking their inquiries with respect to their own holding in STC, or whenever if they have a question or etc. So this is how it works in STC, two separate teams. One is responsible, just to make it short, for the buy side and sell sides activity, and the other one for the regularity and the retail shareholders. Honestly speaking, since I joined the IR, I've seen a significant progression when it comes to the IR profession. When I first joined, I had no idea what the IR is, but honestly speaking, I think this is one of the best time I ever spent during my career so far. It was totally different mentality. As you're aware that I came from a treasury and corporate finance background, in which I used to be the customer. So everyone wanted to satisfy me, honestly speaking. You know, everyone wants my pleasure, you know, to offer the best service to me. When I shifted, or when I moved to the IR profession, and the first couple of months, it was a culture shock. It was totally different. I'm now trying to satisfy my customers. It's always important for all the IR professionals to look at themselves as what we call it customer centric. This is a very important for everyone. You need to treat them as your own customer. It's very bad if they get angry at you. They're always right. Of course, you need to have the balance between, you know, the disclosure that you have and, you know, how to satisfy those people. We have heard a lot of complaints. We totally understand that, even not only STC, honestly speaking, but the entire, maybe the entire industry and the Kingdom of Saudi Arabia, when it comes to the disclosure and transparency, is still growing. It's still not matured yet, but this is an area or angle that we need to work on really hard in order to meet those customers' expectation. I always like to call them customers, not investors, honestly speaking. So this is an area in which we all need to work on, and we need to make sure that we improve it. We always look at ourselves as a leader in that market, honestly. We always be keen to do something new in which other people will follow us with respect to this. Since then, we have came with multiple initiatives, honestly speaking, in order to improve our engagements with our customers, including but not limited to, again, we have created a monthly newsletters. This year, for example, the engagement has skyrocketed. We have met with around 560 individuals, represents around 350 institutions. If we look at them from unique institution perspective, you're talking about around 125. It's a massive. We never say no. Anyone who meets us we say yes, we will make the time for it. This is really important. And yes, I totally understand that this is basically your mandate is to meet those investors. But what matters the most also, I'm touching upon Sofia's and Debbie's point, as your point also, John. It's really important to be proactive. You know, everyone can sit in their office and waiting for a call to come or a conference invite to be in your mailbox and you participate. This is not the case for us. We are trying to be proactive when it comes to our approach to our customers. We start the investor targeting by trying to be creative. For example, we do have some terminals that we are using internally, in which it helps us to see those investors who has interest in the region, for example, and who has interest in the telecom sector, for example, and also they have bought some of our competitors' shares and they did not bought our share. So those, the ones that we believe will be the priority for us to target to start with, at least. Then we go gradually, you know, okay, we target those guys, let's go to the next level of this information, let's look at those guys. And it turned to be, yes, we just started this like 2 years ago. I think the success rate that we have achieved is around 30 to 35%. Not bad at all. You know, since you started, of course, you don't expect that everyone will respond to you immediately. Sometimes, at least, you need to plant that seed in their head that there is a company called STC that is ready there. If you are interested, at least if one day they become interested, that they will have the material that they need in the beginning to have an initial understanding when it comes to STC and STC's businesses. Yes, there is ups and downs when it comes to telling your equity stories to the market. For example, sometimes you have million stories to tell. You know, everyone is excited about the company itself, and everyone wants to get a piece of you or your top management. They would just want to spend few minutes with you guys. But sometimes, of course, as a business, it goes ups and downs. There is no news, but now you need to be creative in order to keep those guys interested in your equity story, no matter what kind of activities that you are undergoing right now. This is a profession that you need to give your heart and soul to. It's a fantastic. It will give you, again, the other side of the story. Serving a customer is totally different than being one yourself. We have seen all those big companies that once they put their customer satisfaction on the top of their priority, they become a fantastic player in their own industry. So this is what we want to do. A very small thing that I would like to touch upon also, and I will conclude with this. Unfortunately, what we are seeing right now, that there are no consensus when it comes to certain activities when it comes to the IR itself. For example, I see some companies that they have their own team when it comes to the ESG. I see some teams, they have their own team when it comes to the annual reporting, either it's under the IR or under, for example, corporate communication. I see the IR itself as being positioned under different, or in different positions within the market, within the company itself. Some IROs are reporting directly to the board of directors, some of them CFO, some of them to the vice president of corporate finance, some of them, to the board immediately. So, unfortunately, I don't know if this is something normal or healthy, but I believe that once you have this kind of, not having consensus with respect to where the IR should be, what the IR should report, who the IR should report to, I think this will make a little bit of confusion to everyone, even to the listed companies. Even I've seen that the IR report to this chief strategy officer. It's so confusing sometimes. Maybe there is no right answer. Everyone looks at it from their own perspective, which is understandable, honestly speaking. But again, I believe that if we can have something with respect to, I have my own views on this, but I will not share it right now unless if you insisted. But anyways, But I think if there is kind of study or something that shows where the IR should be where the IR should be placed when it comes to the company itself, I think this would give a very nice kickstart to all the companies that is considering to have an IR function established. Yeah.
Super, Turki, and thank you so much for sharing so enthusiastically. I always look at IR teams, and if I get customer-oriented people with the sort of enthusiasm that you show, I know that's a go-to. I think both your company and Sofia's company are such important sectors, and I always think a good way to compete with peers, not just within your own markets, but across the region, is to be the go-to person or the go-to team. I'm not sure that it matters personally, having had different reporting lines, whether it's to this particular C-suite member or that particular C-suite member, as long as everybody knows where the point of contact is and how to basically get the information that they require, whether internally or externally. But I'm sure Debbie can shed more light on reporting lines, perhaps not just within the region, but also outside the region. But I'm interested to turn the conversation back to Sofia, just to hear what she thinks of some of the things that Turki was talking about. And I think in particular, initiatives like, for example, regular monthly newsletters, that just opens up the communication. That just enables you to be the go-to within your sector. And I think that's hugely encouraging, because often we do think of IR as primarily financial reporting. I've already said that whether we call it ESG or sustainability, complex extra financial reporting is going to become part and parcel of your investor relations. And maybe that'll impact the makeup of the team, maybe that'll impact the reporting lines and indeed the KPIs. But just be interested to turn the topic back to Sofia, just to get her input, given, I'm sure, another perspective, Sofia.
Thank you, John. I mean, Turki, I really appreciated all of your comments. Thank you for sharing. You know, some of the things you said resonated strongly, and I agree with you that it's absolutely critical for any IRO and IR teams to be proactive, right? That's you know, it's I would say it's really it should be the foundation, right? Customer centricity, being there for anyone, you know, who wants to ask about your company, making sure that you're proactively reaching out and having that effective engagement, not only with investors, but, you know, with other market constituents, rating agencies, and having a targeted approach, right? Depending on whether you're talking to an institutional investor or retail investor. I mean, this is really critical, and it's great to hear your enthusiasm. I mean, clearly it's a core value, so it's something that you live from the inside out. And that's exactly what we need, because that's what's going to really drive our capital markets to another level, that level of customer centricity and making sure that we are here for investors. That's what's going to make the difference. Now, on the point around the reporting lines and the structure of the teams, etc., it's really fascinating. I mean, I've been doing IR for 8 years now, so it's not a very long time, but in these 8 years, you know, there's been various configurations of where IR sits, and what I've learned as well is that there is no, I would say, one size fits all. I think depending on where you are in your journey, depending on what happens within the organization, etc., there would be changes that impact, I would say, how the model works and how the reporting works. However, what should not change is the quality of what you're doing. So that should be consistent. But it's interesting because things move. The environment shifts. This is, the only constant in this market is change. But as long as we continue to, and we're focused on doing great work, that's what matters the most. I mean, with regards to sustainability and ESG, this is definitely a major disruptor. And this is something also through the practitioner survey that was highlighted, right, as being really the trend, and starting really to dominate the engagement with the market and basically your day-to-day work as an IRO. And we're very fortunate to have a very strong ESG sustainability team at FAB, but we collaborate obviously very, very closely with them. But I think amongst other things, I mean, we discussed about technology earlier. Debbie, you mentioned it in your presentation. This is also a disruptor, but obviously ESG is also a critical factor. So we will continue to learn and evolve with all these considerations in mind. It's going to impact how we work. It's going to impact our resourcing as well, and that's what I guess what makes things exciting for us. Yeah, but I really think that we're starting a new era perhaps for IROs, right? I mean, before an IRO was much more reactive, and just in the past few years, at least in the UAE and across some of the markets here in the region, there has been a huge shift to being more proactive on so many different levels. So this is extremely encouraging, and this is exactly what we need.
Thank you, Sofia. Always very, very instructive. Debbie, let me turn back to you. Before I ask you about KPIs or anything you'd like to address, given what both Sofia and Turki have just been discussing, I just want to get a handle on investor targeting. I've said that the markets are opening up here. I've said that there's really healthy IPO pipelines. Presumably there is investor interest from outside the region, and if so, have you identified which markets in particular our IRO should be prioritizing?
Thanks, John. And most of you will know that most of the work that we do is within the UK and Europe. Obviously, we do work in the Middle East as well, but it's a smaller proportion. If I reflect on the work that we've done with clients this year with the rise of IPOs, it's actually been an interesting shift because there's been a lot more on European exchanges rather than necessarily what you'd expect to see on the London exchange. And that's for various reasons, including Brexit and including liquidity, etc. And I think sometimes, people might overlook some of the smaller European territories, but actually they have collective, I think maybe they were overlooked because of the fragmented nature of them. So from a practical perspective, to do a roadshow and target all of those regions was quite time consuming, quite demanding. Now that we're most people are moving to some hybrid nature of digital kind of roadshows and on online virtual roadshows, it's much more effective and efficient to be able to target some of those smaller European regions. So and also, I guess, I worked on, I think it was Tech's largest European IPO. Again, they chose to, the consumer tech businesses are choosing to list on European exchanges. That's from my experience, that's what I've been seeing. So, I think just more broadly, some of our clients are, in fact, yesterday I spoke to a new CFO who's looking to, they don't really have it's a London, an LSE listed client. They don't really have an in-house IR function. They have a junior person who's managing the kind of IR, like a coordinator role, who does the corporate access, but he wants to elevate the function. He wants to bring it in line with where most other people are. And one of the key criteria he was saying that he's looking for in this individual is he wants someone really experienced in capital markets to be able to bring the buy-side relationships to the table, because they don't have them. They haven't, as we were talking about, they haven't proactively gone out, and now they find themselves in a position that they're falling behind, and he thinks the share price is undervalued. The analysts are on side, they've got nice share price targets for them, but how do they need the community, the rest of the buy side, the investors, to see that? So one of the key skills he's looking for is someone who can bring who has a good knowledge of institutional investors in the UK and globally, who knows in the US, East Coast, West Coast, differentiates in the Middle East, Asia. So it's definitely first-hand experience becoming a thing that clients are looking for in candidates when hiring.
So in many ways, all to play for. I'm just wondering, Sofia and Turki, perhaps starting with Turki first, whether in terms of investor targeting, that has perceptibly changed in the last 1 or 2 years. I know Debbie's just said, and you all said, that technology allows you no excuses. You could actually talk to anyone you wanted to. But are you prioritizing particular target markets from a share register point of view?
No, honestly speaking, we are targeting everyone you can think of. You will not be surprised that you will find an email in your mailbox, John, that we are targeting you to. So be careful. What we are saying that we actually the word is our place. We don't care where the investors are. Till the time that if they are interested, we are interested too. Either they are in the US, Europe, Africa, Middle East, you call it. We will be approaching those guys no matter what. It's really important that you don't limit yourself into certain geography. You need to expand, have the possibility opens, all the doors are opens. And this is really a very important way when it comes to your approach for the proactive approach to those customers or investors. So this is how we look at it. We don't start. Yes, we do categorize it based on the geography and etc. This is for our own information. But again, if anyone we feel that based on the criteria that we have put there are maybe likely to be interested in STC, we will be targeting those immediately.
And Sofia, I know you have the advantage of having come from a very successful sell-side career, so your network is obviously very extensive. But again, I'm just wondering whether at FAB, given the circumstances of the past 2 years, use of technology, market reach, whether you've been prioritizing particular markets.
Thank you, John. I mean, frankly speaking, it's not about markets per se, but it's about, you know, being more efficient in our approach, because, you know, I think it's very important to, there are lots of opportunities in the market, right? There is significant liquidity. We just spoke previously about the, you know, IPO pipeline. It's quite immense, not only in the region, but globally. So how do you continue to be visible? How do you make sure that you can attract your desired investors? How do you make sure that you attract the, you know, really top tier, top quality investors that would support your liquidity, that would, you know, accompany in your basically story overall? So it's really about bringing more efficiency in what we do on a day-to-day basis, and also throughout the cycle of our regular activities. I mean, there is only 365 days in a year, 24 hours in a day. So how do you, I would say, improve or enhance, you know, the return on these engagement activities that you have? So I think it's very important, although, I mean, obviously it's absolutely critical to be open and be accessible and approachable. That's very, very important. And this is why, you know, we should not, I would say, dismiss any request that comes to us. But at the same time, we also need to be efficient in how we do IR, making sure that, you know, the engagement that we have has a desired outcome that's attached to it after this. And I think the use of technology is really important. And not only, I mean, it's really technology in the broader sense of the term. It's about, you know, really looking at the workflows in IR and see what can be automated, right? For example, to enhance efficiency. What kind of platform would help you manage your relationships better, whether it's a, you know, CRM or you know, a system of some sort to really enable you to track your relationships and again be more effective in terms of targeting. And you know, one very simple enhancement, it can sound very silly, but it's very subtle. So for example, we obviously we moved to a virtual world, and you know, actually just for the little story, this month we had our first couple of investor meetings, in-person meetings, the first time in 18 months that we're meeting investors face to face. But this is actually, you know, starting again. So, but it's still going to be hybrid. And a lot of the conference we attended, obviously, I mean, most of them were virtual. So, you know, that's the world we live in now. But how do you make it efficient for you and them. There is a exhaustion around technology that we're managing. So, one of the things we started doing is to have 45-minute meetings instead of an hour, 60-minute meetings, or even sometimes 30-minute meetings. These meetings don't have to be 60-minute long, right? We need to make this efficient, relevant, and have a clear objective in mind. Is your objective to attract more ESG sensitive investors? If that's the objective, then narrow your targeting to that population. Look what investors are underweight your company versus your peer companies, and spend a little bit more time on these investors. If you're targeting value, growth, long only, I mean, depending on the profile of your investor, you just make sure that your efforts are well spent, your time is well spent, and you get a return out of your engagement. And that doesn't apply only for you as an IR team. More importantly, it applies also to your senior management, to the leadership, to your CFO, to your CEO, because even more for them, it's very important to use their time as efficiently as possible. And that's our job to support that effort to be very efficient. In terms of machine learning and AI, artificial intelligence, etc., that's an incredible disruptor, obviously for a bank, as you can imagine, for a lot of institutions, a lot of industries, and for banks as well. And I think this for IR, at least in the region, is not yet developed, but there are lots of really good companies and partners who started launching new products that are really interesting and that should be definitely looked at. And I think AI is a world that can really be a great partner for organizations and to help us again be more efficient as teams and support our efforts. So it's definitely worth looking into. We haven't really push that agenda, yes, from an IR standpoint, but that's definitely going to be a focus for us going forward to see how we can leverage these technologies to be more productive and efficient. And investor targeting is going to be part of that.
Thank you, Sofia. Audience, you're a great audience and a big audience, but I'm sure there must be some burning questions. I make it we've got about another 10 minutes or so to go. So if you do have any questions, please use the online Q&A facility. I'm going to turn it back to Debbie and let's talk KPIs. We all know historically generally what KPIs have been, but given everything you've seen in the findings, Debbie, what you've heard from Sofia and Turkey, are KPIs changing? And if so, what would the ideal KPIs be, given your experience, not just within the region, but internationally?
Hi, I actually think we're in some kind of hybrid at the moment, or transition phase at the moment. So I don't think any new ones have fully reflected where the expansion of IR is, if that makes sense. So I think Sofia said we're on a journey with IR. It's almost like we're in new territory. We're building in new factors to the role. Inevitably, the role is expanding, but I think there's a time lag yet until the KPIs can then reflect that. So I think we'll possibly see new KPIs in the next 5 years or less, 3 years, as some of the processes get more embedded. So once technology becomes not a new phenomena but part of our BAU IR role, once the SG becomes part of the BAU reporting, and I completely agree also, I think Sofia said about share price, but using share price as a KPI is just completely misleading and actually can lead to quite a lot of job dissatisfaction, because it's a misleading indicator. It's not within your control. You can only change things that are within your control. And actually, unfortunately, as we all know, market disruption, something happens with a peer and it's nothing related to you, but you get dragged down with that on the share price. So I think it's possibly solely as an independent KPI, it's probably not the most valuable. Where we see others are team growth, number of investor meetings, number of analysts covering you. Again, all of these come with a caveat that they're not 100% within your control. There are things that can happen. Shrinkage of the sell side because of MiFID will naturally affect everyone's coverage, and that can't really be, it shouldn't really be something that you should be penalized for as an IRO. But what you can do is use the proactivity that we were talking about going out, getting new coverage, new initiation notes, that's the type of things that we see people being driven by the KPIs, and also obviously these KPIs then need to be tangible enough to feed into people's annual reviews, remuneration reviews, and bonus structures. So it's important, I think, that that the KPIs are translatable to real measurable things. But I also think that every company will want something slightly different out of their IR function. I know Turkey was saying that there's no general consensus in IR. Again, it reports to different functions. The remit is different. Some people don't want to diversify their share register. Some people have a really small free float that it's just about keeping that going. Some people want to shift it from 20% US to 60%. So every single company has a different priority for their IR function. And I think that's really important to recognize that proactivity wouldn't necessarily work for some. Believe it or not, there's some firms that want to keep a really low profile and they don't do anything proactive. They just keep quiet until there's a catastrophe. But and that's the approach. There's no right, there's no wrong. It's just the way it is. So I think for my advice would be that, again, there's no set KPI list that we have to take with us to every IR role. It's about understanding what the priorities are for the board, for the management. Is it about increasing the profile of the CEO in the investor audience? And if it is, then that could be a KPI, but they won't be the same for everyone. But I do feel strongly, like Sofia, that share price performance really shouldn't be in that list.
Thank you, Debbie. I mean, the only caveat that I would add, of course, as always, is we used to use relative share price performance versus peers and versus the index. So, of course, if everyone's headed down, as you suggested, we'll make sure you're not headed down as much as everybody else. But I mean, that's just an add-on. We do have a question from the MEIRA Saudi chair, who's asking specifically, Sofia, give us an example of artificial intelligence working for IR. And if so, where's the best source for such artificial intelligence in terms of trying to get up to speed?
So I haven't done, I would say, extensive research on the subject, but I know there is a firm, particularly here in Dubai, that actually offers artificial intelligence, or at least machine learning tools, in order to better understand how your shareholder value is created, and to really dissect basically your valuation. So that's something that I've seen. I don't know if we can name names. I'm happy to do it, but perhaps John and Alicia, the attendees, can reach out to you to have that name. I'm not here to market any particular partner. I don't want to go there. But there are also other tools, and this is something that really interests us, that we are not doing as much as we would want, is to basically track market perception using artificial intelligence, and that's something that's quite, I think, widely used. But frankly speaking, I haven't done enough extensive research to see all the opportunities available for us to use and leverage these technologies. We've been a lot more focused on automation, to be honest. That's really something that I see a lot of value in, and that we're not doing enough, because we've gone through a merger 3 years ago, and lots of things have happened in the meantime, and we have limited resources. So that's something we're doing more and more, just to identify the areas that we can really automate, to really reduce the human element as much as possible, so that we can really spend our precious time doing really high return and high impact activities that are actually visible. The other stuff that can be handled by a system, a platform, or machine, we need to clearly identify them and find a solution around them to automate them.
If I can add a very small thing with respect to this, touches a very nice thing that we have done, at least in the company, that of course that we are fortunate that we are working in technology companies. So the IT guys helped us a lot in creating a platform or a system in which we take all the shareholder register, We upload that into that system, and the system itself will categorize all the shareholders, will do the tax. They will deduct all the tax. If you are a foreigner, as you're aware that based on the Saudi law, you need to pay a tax on your dividends, for example. So the system itself will do it for you. They will give you the entire list. Then now what we are trying to do, that we want to upgrade that system in which that once the dividends is paid and we receive some rejection due to account being inactive or some problem with the account number, the system itself will log into STC's platform, and we will be able to get all those guys' numbers, personal numbers, and we will send SMS to them that, guys, that you have uncollected dividends, you need to go to the bank and collect them. So this is something that we want to do with entirely automated, and we have done the first phase, and we are currently doing the second phase. So this is, I don't know if it qualifies as AI, or but for sure it's a machine learning, I think, because we feed the system with the entire information, and that's it does all the work for us. 77,000 lines multiplied by 11. So just imagine the amount of information that that system processes.
Thank you for that, Turki. I was going to add to Sofia's point that actually tomorrow we will have a report by this partner that it's an expert on artificial intelligence on our newsletter. So I urge you all to look for that report tomorrow on the newsletter. We are also planning to do some webinars next year on artificial intelligence, because it's true, it's something really new, but it has a lot of potential. And we were saying the other day that we feel confident that in 2-3 days we will all be talking about this, and it will be part and parcel of any IR program. So always trying to share with the members and with the IR community what we have available in these terms.
Yeah, it's much appreciated. It's been a great discussion. I know we've only got a few minutes left, so I'm going to ask each of our panelists one question, starting with Debbie. Debbie, in the next minute or so, what's the biggest issue you think IR has, and what do you propose we do about it?
Sorry, I was muted. Thinking with my headhunter hat on, I think I would say the shortage of talent. If I'm looking specifically at the region, you know, I've got the benefit of being able to compare it to other regions in the UK and Europe, and it really is a stark contrast in terms of the availability of talent. So I think that will probably be one of the hurdles to the growth in the region. And as I said earlier, I think there's a lot being done to rectify it, and the gap will be bridged. But again, that's something that will need proactivity to address. It's not like you're going to get an influx of talent all of a sudden to bridge some of that gap. So I think on the reflection of that, if you on the other side, sorry, if you do have IR experience, it's like gold dust. So utilize it to the best of your advantage. You know, make sure you're continuing to grow and develop. A lot of people say, you know, where next after IR? A lot of people don't need to move on after IR. If you feel like you've stagnated or there's no growth in your current role, move companies, move sectors, move market cap size, move to an IR advisory role. There's lots of opportunities within the IR remit if you've got the IR experience.
So wow, music to the ears of our audience. But Turki, I know you're a big believer in encouraging the next generation, and that's surely part of the solution to the issue that Debbie's just highlighted.
There is no doubt. Say the most important thing that I would say for the next generation of IROs, including myself also, that the sky is the limit when it comes to the opportunity. The profession is growing so fast, and the demand is high, as Debbie described, and there is still a lack of talent that the market needs massively. I believe that again, the only thing that differentiates a very good IR from another is the creativity, honestly speaking. We all are aware that just a very small example, when I first joined IR, the ideas that I had was massive. You know, even the entire room cannot fit them. But as you progress going forward, having this quality, very good quality creative idea becomes really rare. So being a creative professional, trying always to find the improvements and how to improve, not only from department's perspective, but also from engagement perspective. It's really crucial and important equally. Very small example for everyone. One of the things that we have done recently, that we have realized that based on the question that we usually receive, that there are certain information that is available, publicly available in the market, but no one has a clue how to get those information. So what we have done, that every 3 months we create an ad hoc or complementary reports that takes into consideration, for example, in STC's case, if there is a change in pricing when it comes to the postpaid, prepaid packages, because we keep receiving a lot of questions whether the price has changed or not. Another example is we have given a complementary report when it comes to the IT space. You know, what's how the entire IT, based on the research that we have, and we have a very good intelligence team who feed us with those kind of information. And we took this, we filter it, we distribute it to the entire mailing list that we have. It's a complementary, very nice report. Everyone now has a very good understanding when it comes to the IT, and it was received really with a great appreciation. Yeah.
And for Sofia, with your magic wand, what is the future of IR? Excuse me asking.
No, I mean, I don't have the magic wand, unfortunately. I wish I had one, believe me. I don't have the magic wand. I don't have the crystal ball. I don't have any of that. But the only thing I'd like to say is, you know, I almost want to say, let's stop, you know, talking too much about the future. Let's talk about now, because the future is now. There are lots of things going on, lots of opportunities. And I think this discussion, you know, just highlighted, you know, it's you know, amazing to hear what Turkey is saying about, you know, the great work he's doing at STC, and how the team is always trying to stay ahead, you know, find innovative ideas to be, you know, the best IR team they can be, to provide the best service they can provide. We have tools now that enable us to do a better job, to be more efficient. Let's use them. We have, you know, a great region that's really very dynamic. There's a lot going on and so many opportunities out there to do the best work, to do the best with what you have. This is what we are all here to do. Let's do the best with what we have, with the tools available. And let's always, you know, keep our eyes open to our colleagues internally, to the market externally. Let's always be here to listen, process, and respond accordingly. But really, the future is now. There is a lot going on, and I look forward to see what we have to offer. I'm really very, very optimistic about, you know, how this whole region has been pushing the envelope, particularly from an engagement standpoint. I mean, I remember when I was a sell-side analyst more than 10 years ago now, and I used to approach companies in this region, which I will not name, and I was barely getting a response from the management, right? So I was doing my research by myself, just using publicly available information, and now I can't even think of a company, at least not that I know of, that is not responsive. So even just that is a major improvement, and there is like really very very good engagement from all the capital market constituents. So let's think about what we can do now. Let's stop talking about the future too much.
Sofia, as always, so down to earth, and we all appreciate that. That's why you're our vice chair at MEIRA, of course. But sadly, wonderful audience, we've got to the end of our latest IR Essentials webinar. On your behalf, I just wish to thank our esteemed panel, Sofia, Turkey, Debbie, and also the Saudi Exchange for hosting us, and I'm sure getting ready to set up the next IR Essentials. Right, Leila?
Yes, thank you, John. I would just, if I may, John, I would just like to thank our speakers as well and highlight to any of our issuers, if you have any further questions that you couldn't pop into the question panel over there, do feel free to reach out to either John and Alethea or the exchange itself at listing@tadawul.com.sa. And regarding, to go back to one of the points that Turki was discussing, where it comes to the structure of where does IR fit in ideally in a company, we do urge all of our issuers to take a look at the IR toolkit that the exchange have created. It does follow best practices. So even though there is no ideal place, but that would be recommended to any IRO to have a look at it. And I just wanted to thank you all over again. And it's been great. Thank you, John.
It's a real pleasure, and obviously we can't do any of these events without tremendous support from all of you, including our wonderful audience. And Aliti has just reminded me, if you happen to not have seen the report, you can download it easily either on this platform or indeed from MEIRA.me. And on that note, stay well, stay safe, keep practicing IR, and thanks so much to our speakers again. You did a wonderful job, and I thought it was particularly interactive and very engaging. And Turki, you're an absolute champion. So thank you so much. I look forward to meeting you in person. Take care, everybody.